What is going on, everybody? And in this video, we're providing a state of the market and stock picks for March 8th, 2023. So if that sounds like something you're interested in, consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, the day has finally come in which Powell essentially gave testimony to the Senate today. This is just one event of many events coming in the weeks to come, and something I've forewarned everybody kind of leading up to this week. I talked about it a lot on the weekly update. I talked about it a lot yesterday, and today we got the hammer. Something I was anticipating and happened today was that Powell essentially came in and said that he messed up and that you're going to have to expect rates to start increasing, and more so than essentially projected or trying to be priced in. And this people were expecting a pivot. That is not at all the case. You know, essentially him saying that be prepared for raising rates even faster at a quicker pace. And the reason essentially for this is because the things that we've talked up to this point is that there's a very delayed reaction in these rate increases. We've seen what the 75-point basis move did. It took inflation down very quickly, but you have to understand it's a very delayed reaction. Then we rolled into a 50-point basis move, then a 25-point basis move. Now, again, my concern being is that what's going to happen is we haven't even seen the 25-point basis move yet. I think we still got another potential, maybe this core, but I would more so bet on the next core that we would probably see that. So I do expect inflation to rise potentially back even into sevens on this next core, and then maybe even higher on the one after. And the case being that if we do rise into or close to 7 or over 7 on this next core, that's going to cause the Fed to come at a very high rate. Something that Powell did touch on was that you have to be adjustable with the rates. But even still, with that being said, it's still way too premature for Powell to have made a 25-point basis move. I think he should have held it at 50 just to make sure that that lagging indicator was right. Now we're starting to see this could get out of hand very quickly. And so he kind of walked back a lot of his statements today, which is something that was concerning. That I would say this would be the event that start kicking things off. We have him again tomorrow in the House. Question being, it's not going to be so much of a shock tomorrow. He may say some things, and so we may play range tomorrow. But now we do have the FOMC or the Beige Book tomorrow at 2 p.m. Eastern Standard Time. That is going to give insight into what's about ready to come in the next monetary policy. I'm sure after what Powell stated today, it's going to again really reflect on data. So data right now is going to be extremely sensitive. And so Friday's non-farms will be they'll have a lot more weight, but more so the core will be very, very sensitive to what happens there, because I do expect the core to pop back up. And when it does, that is going to be, if it's over 7, it's going to be the death blow of the market at that point. And this is why March could lead into a very, very bloody month. And then you're going to have essentially the Fed cleaning up at the end of the month with a new monetary policy. But again, I think at the core following this next monetary policy, after this next core and the next monetary policy, the one essentially in April is going to be nasty. And I think in that report, you're going to see the 25-point basis move that was essentially integrating the beginning of the year in January. So with that being said, this could lead the Fed into hiking bigger than expected, and that is going to put fear in the market and potentially crush the market at that point. I think people are still very there was some battle this morning with the thought that essentially Powell, with what Powell was saying, that no, the data would be good, but the problem is if non-farms on Friday come in and they essentially say that the job market's still very strong, again, that's another point for the Fed to raise higher. We don't want some ridiculously high numbers showing good job strength, and we have to understand that the numbers that are coming out for that are ridiculous because people are working multiple jobs. So I wouldn't be surprised if we have another huge jobs report that blows out expectations because people are just trying to keep up with the rate of inflation. And what's good about watching these testimonies is what the Senate was saying today. People are working, at least 75 hours a week just to keep up with rent. 75 hours a week for the average person just to keep up with the rent. That's not including anything else. This is why you're seeing debt uh, climb to all-time highs, personal debt, and you're seeing savings. I could see why the savings is increasing a little bit from what it was in the 2s to 4 because people are starting to sell assets. And so they're getting that bulk to help with relief and hoping there's some relief. But the question is if the rates are starting to scream back up, and if inflation starts screaming back up, you're going to start dwindling that savings rate very, very quickly. You're going to start introducing a lot of panic. Again, the market hasn't projected all this stuff in yet. So you got some selling today. If this stuff starts playing out, I actually wouldn't be surprised if we gap down tonight, to be honest. And then going into tomorrow, I think you'll get some volatility with Powell. I don't think he's going to say anything different than what he said today. But I think, again, in that beige book might be another, essentially another essentially sucker punch to the market and saying, hey, no, we're looking at a 50-point basis move. The 50-point basis move is jumped essentially from 25 to 75 today. People are expecting a 75-point basis move, and it doesn't help that Powell came out and essentially said inflation is creeping back up. You have that from Powell, something I talked about before. And I know there's a very delayed reaction in this. You have to be patient. You have to wait because this stuff is going to play out eventually. It's not saying you can't take advantage of pumps. I'm not saying that, but in the long run, there is not going to be a pivot, is what my thesis is based around. So when I see that things will correct, all right, you will see that in a lot of earnings. A lot of times you will. But right now, again, the consumer, we still need an event, a major event to happen, whether that is next year, whether the thing folds and the rates just start coming off. Now, I'm not saying the market can't push up. I think the market will start pushing up before that happens, but that will just be an accelerator for the market to start getting into a bull run. But for that to happen, you have to have a lot more bad to happen. And I think we got one more really bad year. I think the bigger event will happen sometime this year, but and I'm thinking it's much sooner than later. But then after that, the stock market will recover after that, and then we'll get into our next bull run when rates start coming down. The problem is, again, the demand comes back too quick when things just barely drop. And in concern, and a lot of even the housing market, a lot of what realtors are trying to do is say that rates are going to go a lot higher. So you have to buy now, right? Essentially, realtors are doing whatever they can. Same with automobiles as well. People are doing whatever they can. They're throwing essentially the book at every new mortgage, 30 rate fixed, or every automobile out there, just trying to make sales because it is extreme. The demand there is. This is what's funny is that you're getting mixed messages on demand pushing up. In some cases it is, in some cases it's not. But ultimately, what we do know is things are bad. The consumer is not in a good position, and this is the problem. And so, and if consumers are selling, they may be actually selling a lot of their assets and buying maybe a cheaper house, right? May be the case. They may be downsizing. They may be moving in together. They're trying to save money. So this is why I can see why savings is bumped up a little bit to trying to soften the blow of what we all know what's going to come. And I'm not talking about a recession. We're already in a recession. We could potentially even be in a depression at this point. And so it is trying to recover, but we have to let that essentially that final death blow happen for this to roll out. And I think this might be it, is the realization of what's going on. And it starts with what happened today, that Powell walked back and essentially said all those things that I've been talking about are the truth, right? And the problem is that he's losing credibility, right? And when you do that, you lose credibility, and so people may not be so focused on what he says anymore and just kind of do its own thing. The problem is if we start trying to price in a 75-point basis move, right? I think that's very heavily dependent on what's going to happen on Friday, very heavily dependent on what happens in the core. Again, if you get a very strong report, which again, I think is going to happen because people are working multiple jobs, and the way they calculate those numbers is really odd in my opinion, but the way they've done it is going to show some ridiculous numbers. And that's going to be more fuel for the Fed to say, okay, well, the market can take it. And again, we need to kill demand to where there is no demand. And so right now, you can't do that. So I think, again, very premature that we went with a 25-point basis move. I think we should have held at a 50, at least a couple more till we can see the impact of what a 50 actually did. And we saw that. We just saw that when on that last core when we barely dropped. And then now we're dealing with the fact that, okay, well, we also added a 25-point basis move. So you're going to see a bigger, you see inflation start to rise again, which means that they're going to have to jump back to a 50-point basis move, if not a 75-point basis move, to try to combat that. And then they're going to have to wait and see what it does. You're going to have a delayed reaction on how that's going to be. So you're going to need a Fed that's going to have to chase after what's currently going on again, just like we did last year. We did get it under control, but then I think we let off the gas too quickly. And again, this is what you're seeing in this essentially the Senate today, essentially saying that, okay, well, if you're going to continue to raise rates higher, well, it's projected we could be, at the rate essentially that we're going at, we could have 2 million job losses, right? We were only originally projecting 1 million. Now we're saying 2 million. Where is that going to lead, right? This is going to kill demand. And he pretty much said that's what he had to do, right? That's what his job is to essentially to kill the demand because it's causing inflation to run up. It's not anybody's fault by means, but the biggest thing is ultimately understanding that the printing of the money is what caused all this. Whether that's pandemic, whatever you want to call it, but it is what it is, and we're at where we're at. So you can debate it all day long, but we're in the current situation, so we deal with what we currently have. So as of right now, this is what's going on. Tomorrow, your big events are going to be Powell at 10 a.m. Tomorrow. Again, he goes in front of the House tomorrow. Again, I'm not expecting anything new from Powell. I think that sticker shock, we got that today. So if we get a gap down, I don't really see us. We might actually recover if we do get a gap down tomorrow. But ultimately, I think that beige book, again, if there's any kind of mention of the same thing that we talked about with Powell, if there's any kind of mention, 50-point basis move or adding more rate increases than what was previously projected, is going to scare the market even more. And then you do have jobless claims on Thursday. And then you have the non-farms, which will play big. Again, you don't want a huge, strong jobs report. You do not want that, as that's going to be very troublesome for the market. And you're going to lead into a core next week. And we'll see how that goes. Again, if it bumps back up to 7, which I'm expecting it to do, that is going to be the final nail in the coffin for this month. And then again, I think next month it's just going to play into next month where things are going to get worse. Then you're going to see that what happens with just a 25-point basis move next month on the next core. And then, right, that's going to cause the Fed to have to take bigger action where they go with a 50-point or 75. I think that is solely based off of what the next two cores have and how they essentially play out this course. This is the problem we have, right? It's really dependent upon the move that the Fed makes, and so until we know what the move that the Fed makes, we won't really know. And this is the problem with a lot of these algorithms and trying to figure out and project where it's going, right? And now it's trying to project the 50-point basis move is at least what we're getting in next one. That's 75%. That's going to change each and every day depending what is being said off of certain people in the data that comes out. So you have to understand that that number is adjusting all the time. This is where you got to get a lot of indecisive candles. We're getting a lot of chop. Because the algorithms are reading that essentially and going off that, because Powell's essentially stuck with those projections on what's to come. So 50-point basis move is what's on the board. That is what we're looking at, the monetary policy. Again, I believe that's roughly around the 3,800. If that's the case, we could see a lot more selling down to there at least, and then that will put us in the core. And again, if the core is high, the projections are going to change to a 75-point basis move, and that's going to drop us even lower. So this is just the way you have to understand how this whole situation is working out right now. So there's a lot of different, very, very sensitive to data right now. And not to say that we haven't been, but right now, again, if we really miss, it's really going to drop the market. Where before it was more of a battle, as you've seen it barely drop, and the market was still up because we were in this. Again, this hopium state that things were good because Powell said disinflation, and then he walked all that back. So he essentially erased everything he just said. Said, no, we're going to go on data dependence. Not to say that he didn't mention that. He did mention that before, that it was very much data dependent. But now he realized he made a mistake going to just 25. So now he will make up for that and at least hit a 50. And then again, depending on, that's what he tried to say coming into today too, that the next monetary policy, we got the big data sets. So he needs to see non-farms and he'll see what the core is at. And then we'll go from there. And again, he's realizing that inflation is creeping back in. And that is the last thing you want, because then they're still have to play the catch-up game again. And we may be doing 75-point basis moves again. And who knows where we land on the rates at that point. If you start doing that, that could be the nail that's going to drop us to a new low. And then, whatever that event is, the black swan event is going to happen. At that point, I don't think a black swan event would have as much impact. That's not saying it couldn't. It could still drop us 100 points in a day. But I think because of everything that's gone on to this point, if we continue to fall and we continue to make a new low, and then if we have a black swan event on top of that, it could take us down to 3,200. That has been my projected, what I think. I think a lot of the bank CEOs and stuff have thought that as well, are roughly around there. I know other people have projected lower than that. It's give or take, right? It's just a projection, my own projection, and what I'm seeing and what I think, and kind of going based off what I see in price action. I don't think the market would let it fall that far. Anything is possible. Just trying to play into account the events that are unfolding, what could potentially happen and unbuckle. How much that could potentially drop the market. Again, the market's pretty numb to what's going on, so a lot of this stuff is hard to keep selling when the market's already kind of used to it. But ultimately understand that, again, the projections, the throwing off of everything, I think would be enough to make a new low. Again, what's going to feel it is going to be the events that are about ready to take place over the next couple of weeks. And then those, again, will mess with the projections and what they expect for this year. Again, trying to gauge that pivot. I think when you want to talk about pricing in something, I think the market will hurt. Something I've talked about, the market will hit certain levels. Once it hits that level, it feels like it's priced in, then it will start recovering from that point. So I think we haven't seen the low that we should be seeing in this recession right now. So with all that being said, we got Powell on deck tomorrow, and we got the beige book tomorrow. So again, tomorrow it's really going to depend on how we open. In my opinion, if we gap down, I think we're going to be roughly around the 39.42. If that's the case, we might actually rally a little bit going into Powell, and then we might just rattle around here. Again, as long as it doesn't say anything new, beige book, if it's projecting 50, it could be enough to break us down. It really just depends on the beige book. The beige book might not have a ton of weight unless there's something new there. The biggest thing for the beige book tomorrow is just looking to see if there's anything new that's not already mentioned by Powell. Again, people already got sticker shock today. It's more so, and then we have to have the digestion overnight, so that might cause us to gap down. So just be mindful of that. It really depends if we land here tomorrow, but I think we could be chopping around here if we do land there. If we hold overnight, I expect this thing to go back up to 40.25. Maybe for Powell to drop it back again. Maybe that would be what breaks us down to this 39.40 mark. Again, ultimately, I think once the new core comes out, if the core is bad, we're going to see this, if not lower, I think, in my opinion. Again, it really just depends on how things play out. You need a lot of bad events to happen at the same time for this thing to drop, I think, back down to 3,800. That's 50-point basis move. And then again, I said, if what I'm projecting, what would happen next month is the core to be even worse. And then the Fed having to say, oh man, we need to either do a 50, we need to potentially look at a 75-point basis move. That would cause more panic to give us a new bottom, if that makes sense. So nonetheless, again, we have to see where we land. But currently right now, if we stay flat, again, I think we're going to pop. If we break below, again, depends on how big that gap is. Maybe we open here at the 39.40, and then we just gap all the way down to the 3,900. Strong possibility. Again, today has been a real big gut punch, and that's what I was thinking could potentially happen. Really just depends. I thought Powell would have probably waited a little bit more till he got the data, but he just let it drop today. Again, you got to think about all possibilities when events go on when he's talking. And again, when he's in front of the Senate and the House, right, he can't hide that stuff so much. He has to kind of project that stuff. Again, I think he knew he off-stepped it when he saw that next core come out right after the last monetary policy. The next core came out, and he was like, we probably should have went with 50 on that one. And now we're starting to see what is happening now from that. So nonetheless, we see where we open here. So it's hard to go off these levels. These are my levels. Again, these are my zones that I think we will play in. Depending if we drop into this zone, or we potentially push up. I could see us pushing up, potentially trying to run back to 40, 75. It depends. Maybe Powell comes in and he's dovish, and that could push us back up to retest this. That could be a possibility too. So everything's a possibility, and this is why you have to wait and see what price action tells you in the morning. So nonetheless, the dollar is screaming back and finally broke. I've been talking about this for so long. It hasn't broke yet. It's right at the cusp. So if this thing does open up above here around the 105.70 tomorrow, we're going back to all-time high. We're going to make a new high in the dollar. Again, something else Powell mentioned today was that he doesn't care if the dollar goes screaming. So just be mindful of that. At this point, he's just trying to get a hold of inflation, and he doesn't really care what havoc he's going to reach. And also something that I noticed too when he was talking to the Senate today, when this whole thing first started, he was very timid, and I mean, he was tripping over his words and everything. Obviously, the great amount of pressure, but since he's been in that role now for so long, he was actually giving a little bit of pushback to the Senate today. On what was going on and that plan and the things that he was doing. And so he's much more comfortable in that position now than he was, just a couple months ago. So this dollar, again, I think is going to make a new high. It really needs to open up above that if it can. It's not the first time it's retested this, something I've always talked about. If it's not the first time, it more than likely will break it. So we'll see what happens there. Bitcoin, starting to dump. It's been dumping nonetheless, but again, it needs to hold the 41K mark. If not, this thing is coming all the way back down to 16K. In my opinion, again, I don't see this thing going up. My thesis is solidifying itself more and more that this data is actually starting to come out. So again, I think this is going to be a very hard reset, but I do believe this is going to be the bottom once this event unfolds. We need a bigger price in. You want to price it in. I don't think we've seen a price in for a depression. And so, again, all depends on events and how it unfolds. The events have to align with the market being fearful. And that will provide the fuel that we need to go to where we need to go before this thing turns around. So, again, you need a bigger badder event for the Fed to start taking off rates, and that's doesn't look like it's anytime soon. So with that being said, we will jump to Tesla. So Tesla, it is really holding this. We'll see if Tesla can break below 184. If it does, it started selling pretty heavy into this today. If it just does break this, again, this has been a safe haven for tech. This in NVIDIA, it was holding even though the market was selling today. So if this does cave, there could be more downside for the market. It needs to hold roughly that 168. If it breaks that, you have that huge gap fill right here down to 140. Again, this is my target for Tesla. I would really like at 101, but we have to really see what the fuel is down here. Again, if I think the way everything is going to play out with the rates and how they're set up, and then if the core does come in hot next week, and the Fed come in at 50-point basis move, I think the next core after that, following up in April, is going to be even higher. And at that point, that could potentially drive this down to a new low for Tesla. And so that's what I'm kind of thinking. It'll be right around the same time we get into new earnings mode. So just be mindful of that. So that's what I'm looking at there. I don't see this making a new high. If it does try to push up, I don't see it breaking. I don't really see it breaking to 200. It may retest. I could be wrong. I mean, it could hold. It really depends if Powell wants to be dovish tomorrow for whatever reason. Always a possibility. Again, it still needs to break 220. I just don't see that happening. It's tried multiple times. It's going to dive, I think, from this point. So NVIDIA, same thing. It's been trying multiple times to essentially break out of this 240. It can't do it. It's tried above it, but it's always been closing below it. Needs to hold the 224. If it does break that, again, another big gap here down to 209. And then if it breaks that, again, you have, again, huge parabolic move here that hasn't been tested. I think you get a big drop there as well, and potentially looking at 177 and then eventually down to 140. Again, just depends on what is feeling as the downside. These have been the stronger ones, so it's going to take a little bit more for these to come down. The banks are starting to roll over, which is concerning. Again, a lot of strength has been in that. BA retest can't break the zone. Something I've been talking about. Now it's time to fold over and start selling, in my opinion. Again, it's broken down. We'll see if this is the final nail in the coffin here. It can break some of these levels. This is pretty rough push up, so it's hard to really tell if there should be a lot of support here in between. So I don't really play BA anyway, but I don't think you're going to see a huge. You might see a huge drop. You'll see a huge drop here down to 192, and then you got the 174, and then roughly the 158. So we'll see there. JPM and the banks, again, huge red today. Though I actually see this dropping below this tomorrow and potentially seeing us at the 131 tomorrow. Again, the biggest question is it needs to hold 131. If it snaps that, again, you got a huge parabolic move that hasn't really been retested. Can see a big drop down to the 117 mark. Again, if you start getting big selling in the banks, it's going to be a problem. It's because it has a lot of weight on the index. Again, Goldman Sachs sitting right at support. It does need to hold this the 340 mark. If it breaks that, you got some support here at the 224, and then support here at the 293. BAC. I mean, BAC has been very choppy because of the CEO has talked a lot about what could potentially happen there. So talking about depression and stuff or recession and stuff. So Bank of America and Goldman Sachs really haven't helped the stock. Essentially, JPM on the other hand has been doing fairly well as far as the stock price is concerned. So they really haven't talked about recession too much. So with that being said, that's pretty much it. We got a busy day. I know these videos have been long, but there's a lot of information. I told you this week we'd have a lot of information. I don't want to leave anything out. These are where I can just brain dump everything. That's what I do. And then I make the morning calls a lot smaller. So if you want to listen to those, follow me at Hemi137. I do daily calls in the morning to kind of give you insight on what I'm seeing in the markets. But ultimately, I just brain dump everything at the end of the day in this video to try to give you some insight into what I'm seeing, what I'm thinking, and then it helps me too. So this is ultimately why I've been doing this channel, is to help myself kind of recoup the day and what I'm seeing, and kind of my plan, my thesis moving forward. So with all that being said, go ahead and drop a like if you made it this far. Congratulations. It's I know some of these videos have been pretty long, but we are getting into some big information and potentially how 2023 is going to play out. So again, we are on cutting edge right now, and this is what it is. It's back and forth until we get that final move. So with all that being said, have a great day, and I'll see you guys later.